Hello traders, this is a video for DAX which I am recording on Saturday. In this video I will cover day trading opportunities that we had for DAX for Friday, November the 9th, and also I will cover some charting on larger time frames, on daily charts, looks at the DAX and also look at the US markets. So there could be some ideas for the next period. Okay, in front of us is the updated chart that was posted on Friday before the open. This here was the small gap down that we had on Friday. In my Friday preparation, I told you that this was, a double top looking chart, meaning these two tops, which is also clearly visible on a 4-hour chart, and with the FOMC statement of the table that there could be some better moves. And that better moves means that market can could provide some moves to the zone extreme of the extreme, meaning that there could even be a move to fill this gap here or to go upside to resistance zones above this main resistance zone. But none of that really happened. We had a neutral day. In prep I also said that bears needs to keep the price below this 530-550 zone because the Thursday ended right there. Let's go to the chart. So this was Thursday price action and this is Friday. And as you can see, on Thursday we had this down move from the main resistance zone, price made a bear flag, continuation move, small balancing here, and that was the end of the day. And immediately when the Friday started, we had this here, this is a gap down. It is clearly, I would say more clearly visible on the futures chart. This is DAX futures chart. As you can see here, this is this gap down. And observe this, as soon as the price filled the gap, there was our setup for short. Here is the chart with zones. Okay, and here you have a zone which is 485 to 500 zone, which is in confluence with the gap from the November the 6th. Now these gaps here, these gaps are from cash index chart, and these gaps are considered filled only if the fill is come in the regular trading hours, not in the pre-market, not in the after hours, only in the regular trading hours. So now we have this gap filled right at the open, and this was our first entry, and this was our first chance to short this market, seeking a continuation of this move. And our first target was the next zone, move into the next zone. So this trade could be taken here. I did this trade personal, my entry point was close to the 490, and I just took this move here. Then I had something else to do and I didn't trade the rest of the day. So the first opportunity was this. As always, when you trade zone fades, the stop is above the zone, somewhere above the zone, and the first target is, first zone to the downside, and you can close your trade here. So as you see, whenever you have a better momentum into the zone, you can use this zone also for entry, but at the back of the zone. And then if you want to go long and you are here with your order, maybe you got stopped there, you should try again on the next zone. So one of the mistakes the trader usually make when he or she wants to to trade the support or resistance levels, zones or whatever, if they got stopped on the first zone, then they will just keep skipping, zones. But in a neutral environment, and that day, Friday, was pretty neutral, and we can make a conclusion about the bias of the day really, after the first 1 or 2 hours. We already could know what the day could be. So this was our first opportunity. There you could attempt a long on this zone. As you see here, we don't really need to go on the lower time frames. We can see all of the price action on 5-minute chart. We could clearly see that there was some kind of bounce from the bottom of the zone, like 30 points to the upside. So if you are here, somewhere here with your long trade, you can, survive this. You don't have to, stay in this. This is not a major zone. This is just one of the zones. You can protect yourself, and maybe you can enter here again. But in any case, you can use these zones for an exit, because support and resistance zones, they have 3 possible purposes. One purpose is to be used as an entry. So this zone we are using as an entry. The second purpose is to be used as a target for exiting a trade. And the third purpose is to help you determine directional bias, to help you determine the current level of strength or the weakness in which the market is currently. So this was our first opportunity for short. There could be opportunities for longs here in this, which would probably end as a break-even trade. This was really a test of the top of the zone, not easy to catch because we didn't have the price going into the zone. And then the price continue upwards until they get again here. Now observe these ranges. So this here was a bear flag, it was a range, then that range got retested on Thursday. This was another range, like here. That range was tested. This was our entry zone, range, gap, continuation of the down move. Entry here, after the open, exit out of the next zone here or here. And then we get another test. And then we observe this movement here. And if you are not short here, you could be shorting this here again. Because we'll really need to see quite a good momentum to break this kind of ranges. And we really didn't see that in this move. So this was a move, small flag, continuation of the move is dead here. So this is another opportunity here for you to go short and target again zones to the downside. And now we come to the best trading opportunity really of the day, and that was here retesting of these daily current lows, because this lows is this low here really is at the top of this zone. You can draw yourself a box here, your daily zone, your small daily zone here, and then observe what will happen here. Observe it on even smaller time frames, and decide to enter here on the test of the current daily low, because enough time passed. This is was tested around 9:50, 10, and this here is almost 1 p.m. This is 12:40. So enough time have passed, and by this price action you could already conclude that this market isn't really, too much bearish, isn't really too much bullish. So that means this is neutral market, and that you can go long here, expecting it again to retest this area here. You don't really know that they're going to go to the cash close. And now here, when they first test the cash close, this is your entry for short, but it really didn't, you know, provide much. It really provided only like 30 points to here, or maybe 40 points to the middle of the zone, because you really can't expect to catch this move in his entirety is a 50-point move. But when you really can't you know, take all of that 50 points. You know, that would mean that you're entered right here the top and exited here. It's very hard to do. So in 50-point move, if you can take 30 points of the 50, that is good trade. And I will not cover this later, because this move from here is you know, almost it's 8:30 p.m. It's not really the time to trade DAX, and especially not to trade DAX on Friday at that time, because you really don't know what will happen there. So that was the opportunities that we had. Price made ping-pong moves between the zones, and every zone here was either a target or a place for you to enter. And even if you're entering long here, you can also survive these moves if you are careful. So on higher time frames, like 4-hour chart, this was what I'm talking about, like a double top looking chart. But this double tops really doesn't have, you can see this clearly, there is no bearish divergence here. And zones from smaller time frames, which are divided for us to have more precise entries, are basically, this is really on a larger time frames. This is one zone from 400 to 440 or even to 450. This is one zone, and this here is another zone. And as long as the price is here trapped between these two areas here, the market could be neutral, and the market can in the next week also go here, from here to here, until it decisively break this kind of consolidation. We will not have a clear bias, meaning that when the RTH is open, that we can say to ourselves, okay, now I will just look for opportunities to go long or just to go short. For now, we must be open for both sides. Let's go to the higher time frames, to daily chart, and this is how this zone here looks. I will up this 400 to 450, and you can observe this. This is something that looks like inverted head and shoulders, not only on DAX. Observe how it looks on the Russell 2000, which had this move, which was a leading US index to the downside. It was lagging behind the S&P and the Nasdaq, and then it was a leader to the downside, breaking the 50, breaking the 200 moving average, and now finding support here. And also observe this kinda looks like a inverted head and shoulders, but we can't say that with 100% sure. This also, it can roll over like this, it can go upside. S&P also, this is the picture that I have shown before. And also that one candle doesn't mean anything. This candle was a super bullish candle after the US midterm election, but this was an exhaustion move right into this October 17 high, which was a very good resistance here in confluence with 61.8 fib retracement, and a great place for the S&P traders here to short. And then the price came right to the 200 moving average again. So something that I was really frustrated as a new trader, looking at the charts, and then the analyst would say, this could roll over like this, going down, but it also can go up. thinking that yes, that analyst is going to be right, whatever happens, because he gave you both scenarios. But we as the traders also must look at the both scenarios and be prepared for both scenarios. So currently in DAX, what do we have? We have basically this big range. Let's go to the smaller charts, smaller time frames again, and observe how that looks on smaller time frames. I will delete now this boxes here, and this is how this from bigger time frames look, let's say on 15-minute chart, and this is it basically. Here is the top of this bigger range, and here is the bottom of this bigger range. And as long as we are here, so all of this between 400 and 650, this 250 points, this is a range, and price can go up and down, and in this kind of movement make another smaller ranges which are clearly visible. Look, this is another range, this was a range, this was a range, this here is a range, this here is a range inside of the range. So a bigger movement we can expect only when we see the decisive break above or below this. And note that there could also be a twist, like this, here. Upthrust, price can go like 50 points above, and then they could slam it down into this range all the way to the downside, or price can make a spring here, going back inside, and then all the way to the upside. And then there could be a decisive breakout. So that is all for me for this video. I wish you a nice weekend and a good trading for Monday. Thank you for watching.